Hey guys, welcome to Little Panda Forex. So in today's video, I'm gonna teach you a little thing that if you master this, you're gonna become a profitable trader the fastest way possible. It comes in two parts. So the first part is greed and the second part is impatience. And when these two elements are together, it's gonna ruin you as a trader and you would not see any profitable months. And I've been through this because I spent a big chunk of my trading career having these issues, and now I've literally mastered them and I am profitable. So let's go into the chart and see what this is. So you have to understand that at the end of the day, we are human beings, okay? So remember, there's two boxes here, okay? This is greed, okay? And this other one is impatience, okay? And they go hand in hand. And this is one of them things that it keeps you from growing as a trader. Why? Because when you have greed, this is when you start gambling. And when you have impatience, this is when you have greed. So they're all linked. And the way you overcome this is by removing greed out of your trading completely. And the way you do this is you need to stop thinking about money and start thinking about percentage, okay? The minute you start thinking about this, things are gonna go south, because as a humans, we have emotions, psychology gets a better part of us, and we like, oh, this trade went $1,000 into profit, oh, I didn't close it, now it hit my stop loss, I'm minus 500. It just starts making you go to here, which is impatience. So when you have impatience, what you're gonna do is you're gonna gamble. Why? Because you're not waiting for that perfect setup. The market moves very specifically. It is not random. It moves through structure, it moves through liquidity. And if you are not being patient, you are going to become the liquidity. As simple as that. Because remember, at the end of the day, money gets transferred from impatient traders to patient traders. That's how the market moves, which is liquidity. Without liquidity, we can't do nothing. Okay, so once you've overcome greed and you start thinking percentage wise, okay, today I made 2%, I made 1%. Okay, have a target. Maybe let's say your target is that for the month you're going to go for 10%. Instead of trying to do that 10% with that one trade in one day, do 1%, then leave it. Then the next day, do 3%. And eventually, when you accumulate all of these different percentages in 30 days, excluding, not 30 days because we got Saturday and Sunday, but you get the point, calendar month, once you start adding these little percentages that you've won, you're gonna hit your target, which is the 10%. In trading, steady race wins the whole thing. And I've learned this the hard way. As far as impatience is concerned, you need to learn that there's not going to be a good setup every single time. You need to wait for the good setup. When you see a good setup, you're like, it is so obvious. The market is literally telling you, can't take this money. But by the time you got to this good setup, you've lost so much money that you've lost hope, you've lost so much money, your mind's completely into gambling mode, and you just don't take advantage of that nice, perfect setup. Now I'm going to show you GBP JPY the 1 hour and how we would trade this using patience, not impatience. So looking at this, the first thing we need to do is we need to mark structure. What we can see, we broke this area, this is our lower low, and then price came and broke that lower low again. So this is a obvious pattern that we see in a bearish market. Lower low, lower high, lower low, lower high, lower low, potentially a lower high to make another lower low. And as you can see, this is going in a channel. This is how a bearish market moves, okay? So once you've annotating your chart is so useful, guys, big time. Okay, we can see that we have an order block sitting over here. Why do we consider that? Because we have imbalance sitting below it. We have this trendline liquidity sitting over here. Okay, and the move that broke this low started from here. So we are expecting price to potentially play around. So price went up very high and it closed here. Now what we're gonna do, we jump onto the 15-minute time frame. What can we see? We can see a trendline liquidity sitting here. And this is the Asian high liquidity, this one here, which has been taken through here. And now what do you have? We have relatives high sitting over here. And the order block has been mitigated. So what expecting price is to take that liquidity from here and then go down. Because we've taken liquidity from here, and then we're gonna go down to somewhere here. Okay? Price took that liquidity, let's see how it's going to react. We need to remember, it can't close above this 1 hour order block. Straight away we had a bearish engulfing candle, which means the bears are in control, liquidity has been taken, and we're back in structure. We closed back in structure. Okay, so this was a fake out, essentially a liquidity grab. Enter a sell position here. Price should never go above this because this was where we grabbed liquidity, and you're gonna put your stop loss like that, and entry maybe take profit somewhere here, you know, just this gap here. Let me move this here, somewhere here. Okay, it's gonna give you about 3.5 R. It is good, we can accept it. You can't have a fixed R because you have to trade what the structure is giving you. So remember, overall we're looking for buys because we broke above this area. Okay, so we didn't create a lower high, we created a higher high. So we're expecting it to come down here to go higher up, but we are still trading this because we need the imbalance to be fixed, and also we've been given confirmation, so we're not, everything looking good. At this point, move your stop loss to break even because we just closed below this low. And unfortunately it came very close to your thing, but it didn't hit your target. It came very close. Okay, so no problem. This part we close our trade at break even, no problem at all. Now price, let's clear all of this. Now what we have, let's annotate again. Now we created a break of structure here, giving us a higher high. Okay, price came back to do a little tracement, and all of this is what we can see here is we have a nice clean order block sitting here. Yeah, before it came to the order block, price generated liquidity, which was over here, right? So what you could have done is, once price went up from here, this is just a fake to clear all of these sellers here. What you do, you put your buy limit at this order block, stop loss you can put underneath the order block, something like this. Okay, let me adjust this. Liquidity has been grabbed, we tapped into the order block, your trade is triggered. Now you can expect price to go above this area, okay, because we got liquidity sitting here and there's a nice clean order block like that. So you can target here and you're gonna get about 3.7 RR. So you see how it was bearish, we broke above structure, came back, and it's bullish now. So now look, if you go back, you can see we made a very strong push, leaving all of this imbalance. Let me highlight all of the imbalance here. We have a bit here, and then when this came down here, it cleared the imbalance here, but we still have some imbalance here, and we have an order block. So price came back down to clear the imbalance, so this little gap, tapped into the order block. So the order block has been mitigated, and we also took all of this liquidity from this trend line liquidity. Okay, our trade would have been triggered. Okay, now what you do nothing, you just wait for price to break above this area very strongly before you move your stop loss to break even. Okay, all of this we don't care. Now we broke above this area, you would have moved your stop loss to break even, but price also hit your take profit at the same time. You see how clean this is? It came to the order block, liquidity was generated before we came to the order block, liquidity was taken, we tapped into the order block, mitigated, and we went above. And all of this has been cleared. And then what happened next? This thing just went parabolic. Look at that. We got out here, we made our money. You know, we don't want to be greedy because price easily could have reacted to this order block. Or you could have put your target around here at this gap here. But you know, this is in hindsight, so it's easy, but you get the point what I'm trying to show you guys. Here, let me clear everything so I show you guys the thing once more. When price was doing all of this, we don't care because it is not clean. When it came here, this is clean. Why? Look at this order block. Let me show you the order block. Look, this order block is so clear. It is like crystal clear. There's no way you can miss this. Look. And liquidity was generated before we came to the order block. You might say, okay, Panda, what about this? Is this an order block? Well, not really, because before price went to the upside, it wicked. The wicks are very important, guys. It came and mitigated that order block, and then it went up. And then after that, price came, tried to manipulate some buys, boom, took their stop losses, and then it went up. This is the proper order block. We had a clean break of structure. If you can see here, you understand it much better. See, very clean break of structure. Whereas this, yes, it's clean break of structure as well, but this is not proper structure. Whereas this is, it's like structure, you know, it's very simple. And we bounced from this order block. Liquidity was taken from here. All of the early buys came back. We generated more liquidity, and the thing just went. Pff. Same thing happened on GU 15 minutes. Let me show it to you guys. So look, all of this was noise. We don't care. This is just price ranging. Where is the proper order block? The proper order block is over here. Why? We broke above this, all of this structure, all of the mess here. We don't care. We broke, came back, mitigated. You could have entered like here. Okay. And then you could have targeted somewhere here, this order block over here, and you could have easily got 4.7 R. And this is all through one thing. The most profitable indicator that is available to a trader is patience. And this setup happened, when did it happen? Let's look at this setup. It happened on Friday, so today. So maybe Monday, Tuesday, Wednesday, Thursday, it was nothing. On Friday you got the best setup, you got your nice 4.7 RR. And the trade before that was the G-Day sell. It didn't work out, but no problem, we took the buy. So you should be able to swap boats very quickly because you need to look at structure. If we'll break an area of value, basically, you need to look for change your bias. Don't be stuck to one bias. Don't try to like force, you know, keep forcing sells when you can see structures telling you buy. We tried to do a sell, it didn't work out, but we got out at break even. No problem at all. Break even is very important for you guys, okay? Go out there and practice this. Patience. Wait for that A-star setup, and then once you got all of the confirmation, break of structure, liquidity grab, everything, put your sell limit or buy limit and just relax. And this is how you become a profitable trader the fastest way possible.